In the UK, the job and wage data was released this morning, with the Office for National Statistics saying the number of people in employment fell by 58,000 to 32,753 million in the 3 months to September. Well, Juliana will unpack this data for us as well as other news on the wire. Hello, Juliana. Good afternoon. Well, the labour market data released this morning may have presented some kind of mixed picture. What is the reaction out there on the street from economic watchers?
Good afternoon, Chimothy. Well, the headline out of the UK is that the UK jobs market is contracting. It seems as if the UK boom in employment is going flat, really. As you said, it's down in Q3. So the 3 months from July to September has shown that there are 58,000 less people that are in work. Also, as well, the jobs wage in Q2, the 3 months up to August, the rise in your salary was about 3.8%. That's dipped to about 3.6%. Also, as well, the number of vacancies in the UK is on decline. It's down in Q3 by 11,000. So at the moment, there are just over 800,000 vacancies in the UK. So it is a little bit of a mixed bag. Of course, the fact that there are 3.8% of people unemployed is still really, really low. It's record breaking in the UK, and it's almost one of the lowest unemployment figures in the world. But the fact that there is a decline is probably going to be worrying for the Conservatives, for the ruling government and Boris Johnson, the Prime Minister of the UK. And that's really because, of course, yesterday, year on year, the UK GDP is declining. So not really a nice bag of news.
All right, let's go to the market street. How have the markets responded so far to the labour data?
Pretty interesting. And we only seem to be seeing a reaction in sterling when it comes to the labour markets. And that's really just on the dollar. The FTSE is really focusing on those tariff wars. We've got Donald Trump speaking imminently, so all eyes and ears are on that. But let's have a look at those numbers. The FTSE All-Share at intraday is up 0.025%. The FTSE 100 is up 0.34%, and the FTSE 250 down 0.16%. In currencies, the British pound is down on the US dollar by 0.21%, down on the euro by 0.09%, and down on the Japanese yen by 0.08%.
All right, let's look at the corporate news out there. Boots parent company Walgreens Boots Alliance has reportedly received a buyout offer from private equity group KKR. Tell us more about this deal and what it will mean for both companies.
This is an interesting story, actually. And, when you look at all the reports, it's very speculative. We've not heard anything from Walgreens or KKR. But the Financial Times and Bloomberg, who were the first to write about this story on Monday, is saying that there could be a potential takeover from the American global equity firm KKR of Walgreens Boots. Boots, of course, are a subsidiary here in the UK. They're a pharmaceutical cosmetic shop that are doing pretty well at the moment. But Walgreens, their umbrella company, their owner, they are in trouble. They've been in trouble for the past few months, at least at the beginning of this year. Their shares between January and October have dropped about 10%. And that's because it's a really competitive market. They've been saying to their shareholders that they plan to make a lot of staff laid off. They also plan to make a load of closures. So KKR have come in with this $70 billion deal. And if it's done, then apparently on private equity, this would be the biggest deal on record. As I said, nobody from KKR or Walgreens Boots are talking at the moment, but those in the know obviously have some sort of idea, because when Bloomberg broke the story on Monday, their shares rose 6%.
All right, Juliana, let's continue to keep an eye on those stories out from London. In the meantime, enjoy the rest of the day.
Thank you.
Major stocks markets in Asia closed higher today after struggling for direction earlier in the day. Concerns over the state of U.S.-China trade negotiations, as well as the recent escalation of violence and protests in Hong Kong, continued to loom over regional markets. Japan's Nikkei 225 gained 0.81%, while the Topix index recovered from an earlier decline to close at 1,709 points. Mainland Chinese shares were mixed. The Shanghai Composite added 0.17%, while the Shenzhen Composite gained 0.17% as well. Meanwhile, market movements in Hong Kong continued to be monitored. The Hang Seng Index rose 0.41%. The Kospi in South Korea added 0.79%. Australia's S&P ASX 200 lagged as it slipped 0.29% to finish its trading day at 6,753 points. And the U.S. stock index futures were slightly higher in the morning. At around 5:40 a.m. Eastern Time, futures indicated a positive open of about 15 points. Futures on the S&P and Nasdaq were both marginally higher. Market players remained focused on China-U.S. trade news amid some concerns regarding plans to sign a trade deal in the coming week. President Trump will be speaking at the Economic Club of New York today, where he could give clues the status of trade talks between the U.S. and China. On the data front, the calendar is thin, with only the National Federation of Independent Business Small Business Optimism Survey due at 6 a.m. Eastern Time. In corporate news, CBS, Nissan, Datadog, and Dr. Horton are reporting today. And here on the African continent and still on capital market issues, the government of Ghana has been asked to provide more money to bail out investors who risk losing most of their savings, heaping pressure on the government struggling to put a lid on its expenses. The nation's Security and Exchange Commission on Friday shut down 53 money managers overseeing about 8 billion cedis for infractions, including absconding with clients' funds. That has spurred the SEC to ask the government to increase its support from an initial pledge of 1 billion cedis. The government's debt load is being compounded by bailouts for failed lenders and liabilities for excess power and gas that Ghana doesn't consume. The International Monetary Fund projects Ghana's debt ratio will be about 63% of gross domestic product by the end of the year, compared with 51% in January. Zimbabweans finally got access to new low-denomination currency today that authorities hope will end chronic cash shortages. But banks maintained an existing weekly withdrawal limit of $20, frustrating many customers. The new 2 and 5 Zimbabwe dollar notes and coins were scheduled to start circulating on Monday, but failed to appear on time, causing confusion at banks. Shortages of cash, foreign currency, fuel and power are the most visible signs of the Southern African nation's worst economic crisis since 2008, when hyperinflation forced the government to ditch its currency. Hundreds of people, mostly pensioners, queued for cash outside one bank in central Harare and were issued 150 Zimbabwe dollars of the new $2 bills and coins. They were told to return on Thursday if they wanted more. The central bank has maintained pre-customer withdrawal limits of 300 Zimbabwe dollars a week, half the amount a farmer needs to buy a bag of fertilizer, amid soaring inflation that economists estimate at 380%. All right, we'll take a short break, and when we return, we look at the commodities market as well as other stories coming in. To stay with us.